Good morning, WTI. What can I say about it that I didn't already say? I explained why it was going to stop around the 76.5 area. I showed the monthly chart. I'll just pop back and show it to you again. For those that are in any doubt about the WTI, you can see quite clearly it hit the 61.8 and it failed. Now, the monthly pivot is 71.28. It's very, very close to our daily pivot, which is coming in at 71.33. So this is an important area we're in now. It really is an important area. Yes, we've got the head and shoulder base formation in oil, as you can see here. But that 61.8 was an accident waiting to happen. Now we'll pop back to the weekly. So you can see why we failed around those levels. And, you know, fail we did. So now we're at the weekly area of 72.37. That is the weekly pivot. We are trading currently below that area. We've got our moving average coming in at 70.77, and the next one that we're looking at is coming in around about 69.5. all right, so it is still in front of that Fibonacci level that we're looking at, which is at 68.56. Don't forget, you've got this little trend line coming in here. If I just eyeball that up, that's coming in just around about that level there again, 68.56. So, you know, you've really got to be careful. Our technical indicators are pointing lower on the weekly charts. Our ROC actually is pointing higher. Now, it's just poked its head above it the last couple of weeks. And this is obviously because of this. So, as I've always said, it takes a while for the indicators to actually show it. But if you're looking at the longer term time frames, you can actually see and act upon the long-term fibs. But also, you look at the long-term support and resistances as well. And if it all holds together, you know, it obviously wasn't just me that saw that 61.8 fib. You know, the world and its dog was selling oil up at those higher levels. So let's have a look and see what the daily chart offers. Now, we are oversold on the daily charts. We are. And we have hit this 50% fib level. We didn't stop at these two tops. We stopped at the 50% fib level. This is why these levels are very important, because, you know, I hear don't look at them, don't use them, don't do anything with them. And my argument is if you're not putting them on correctly, you're not going to catch what the fibs are telling you. I've used Fibonacci for years now, and they work. They really do work. So it's hit the 50%. It's tried to get higher. Today we did poke our head above the weekly pivot at 72.37, but we're not staying up there for long. And look, already we are trading towards the lows of the day. Now, again, we're looking at 71.33 as the daily pivot. But 70.63, I think, is going to entice prices again. If you can see the 21 moving day average, we just have caught today's move up, and that average is coming in at 72.62. Our high has been 72.70. So, what now? Have we missed the boat in selling? I don't think we have. I think the weekly charts are going to take precedent over the daily charts, and I really do believe the oil can come lower. You've got the 55-day moving average coming in at 68.88, and you've got the 69.88, sorry, and you've got the 61.8 or 61.8 coming in at 69.17. So that's where I think we're going to end up. Where we go from there, I'm not too sure at the moment. The weekly charts do not look well, but for the time being, I think we ought to sell into rallies. As I said, we were all going to become oil traders. We didn't, because the stock market took precedent. So anywhere up to this moving average, which is coming in at 72.62, and this little lot over here, which is coming in at 72.78, that's going to cap, I think. And I think today we play this from the short side. Okay, great. I'll catch you later.